If you want to be a better trader, you are going to watch this to the very end. Now, yeah, it's a little bit of a longer video, but this is going to show you how to be a rock star trader, how to come in with the right mindset, how to reinforce good habits, how to wait for the best trades to set up in your favor, how to get prepared on those trades, and then how to manage those trades once you're in them. If you take the time because you're serious to learn how to be a better trader, you're going to get so many golden nuggets and so many key takeaways from taking the next 30 to 40 minutes of your day to watch us to the end, to take notes, and then to follow up with any questions you have in the comments below. I mean, we literally go through everything from sitting back, being patient, assessing key levels, assessing zones, to thinking about what kind of trades could set up, to building the right types of plans, identifying any confluences, waiting for price action to validate our entries, to taking the trades, to managing the trade, the ins and outs. Like I said, so much value, so much education. And the biggest thing too is how you remain stable when you're in trades, how you keep the emotions in check, how you remain calm, cool, collected, to not give into emotions, how to not manage your P&L, but to how to manage the trade. If you watch this to the end, you take notes, you listen, it'll absorb. You'll retain this. You start applying this, I promise you, you'll start to be a much better stock trader in 2025. And again, take those notes. Follow up with any questions you have in the comments below. I'll be reaching back out to every single one of those to further help you guys crush it in the market in 2025.
Are we getting close on SPY here?
We are getting close. But here's kind of where my head is, Barry, is I always like to say, have I already seen my ideal trade play out off that level? Is this the first time we would be seeing that trade play out? The second time, the third time, right? The more times we see a zone hit intraday, the lower the probabilities it's going to play out in our favor, right? My favorite saying is the first is the best. Second one, lower probabilities. Third one, even lower probabilities. So have I already seen my ideal setup play out off that zone? Unfortunately, I have. We got below it, retested it right there, and then we saw the move down. That was the move we were expecting. That was the first and the best. Now it's coming what? For the second time to that level? Could it play out and drop on off? It could, but what do we know about the second, third, fourth attempt off a zone, for example? The probabilities are a little bit lower. If the probabilities are a little bit lower, the goal would be what? Be a little bit more patient, wait for much better price action to really validate, okay, I can justify getting in, or maybe having a confluence established on the trade to re-increase those probabilities. But for that reason, I wasn't willing to just jump the gun and get in here, because that to me was the second attempt to get a short off that zone. The first one was back here. And unfortunately, the first one played out in pre-market. We can't trade options in pre-market. So good trade. Analysis was spot on. It would have played out, but it happened like 5 minutes before market open. There was no opportunity to take that. So I saw the first one. Second one, I'm a little less confident. If I've got a couple other confluences sitting there, I'll take the trade. But do I have any other confluences sitting there? I don't. So I'm going to be hands off. And I'm happy I was hands off because look at that. It just broke right through it. Well, let's do this. What do we see happen when we break resistance with force? What tends to happen?
Crack and retest.
Break and retest. Break and retest.
That one.
Yeah. We break resistance. We crack support. And that just helps newer traders understand the differences. Because if we use break and retest for both, sometimes they get them mixed up. I've seen that. Break resistance, retested to support. Those are longs. We crack support, retested as resistance. Those are puts. Just adding that slight little different verbiage at the beginning helps traders dictate the two or separate the two and see the difference.
So you're saying stay off crack?
Yes, I'm saying don't do crack. It's not good for you. Make your teeth fall out.
Got it.
Probably make you a good trader. You'll be a little bit more giddy, a little bit more dialed in maybe. But yeah, do you want your teeth?
You have more fun, probably. That's all I've heard.
So yes, we break resistance. Right? And then if we break resistance, old resistance tends to flip into new support. And if we retest old resistance as new support, then we could play that long and trade it to the upside and play some calls. So that's where our head's at. But sometimes what happens when we don't see a forceful break through resistance? What if it's like a little weak break? What sometimes happens? We crack right back below it with force. Just to do what? Retest it with a lower high and then set up for the reversal. That's a crack back, lower high drop. Why am I even thinking that? Because I like to remove bias. I don't just want to say this is definitely the break and retest, when in reality, it could crack back, put in a lower high, and drop. So I'm going to think both sides of the trade and then just wait for one to validate itself. If the break and retest is setting up, I'll take the break and retest. If the break and retest isn't setting up, it could be the crack back, lower high drop. And at least I want to be thinking that to be one step ahead, to be prepared if that were to happen. Because if so, I know where my entry would be. I know ideally where my stop's at, where my target is. I could already start to build that plan ahead of time, just in case. I'd rather be safe than sorry. But we're starting to push through that zone. How far above the zone are we? So we are pushing about 50 cents above the zone. So it's a nice break above it. It's not like 10 cents, 20 cents. It's not wee. But it's also not super significant with a lot of volume either. See volume kind of tapered on off on that next candle. If I see breaks of resistance, I want to see buyer step in with some force. I want to see a clear break and a clear retest for a clear long. Right now, we're just seeing some seller step in here a little bit. You know, trying to push, seller step in, trying to push, seller step in, trying to push, seller step in. Doesn't mean we can't see the retest for the long. We just have to look at what we're currently doing. Just make that assessment, build it into a potential plan here.
When I first started watching you on TikTok as a new guy, I remember you trading the SPY at 561.
Oh, that was when it was down there, yeah, 560s.
About 6 or 7 months ago.
When I started watching Josh on TikTok, we were still at 420.
That's years ago, bro. That's crazy. 420.
When I started watching Josh, he was trading off of trend lines mainly.
Yeah, I've traded about anything. I still take trend line trades when they set up. I mean, they're successful. They're profitable. I mean, look at Matt, for example. One of Matt's go-to strategies is 0.3 on a trend line when criteria is met, and he's got a nice mechanical system built around it, where he's got a very high win rate, very high success rate, and he's simply trading off trend lines because it works. There's consistency behind it. You got to find what works for you and then dial it in, and that's something that you replicate and something that you scale. What works for you is normally going to be different than what works for any other kind of trader. And you can just take bits and pieces of what you learn from other traders and then build your own little system and methodology to it. You want to trade off trend lines like Rael's doing because he sees good 0.3 trades off trend lines when they're setting up beautifully. Like, he's learned to do it. It works for him. He likes it. Boom. He can now take that style and that type of trade. The goal is to give you all the tools that you need and then help you piece it all together to find out what works the best for you. And that's your edge. That's your methodology. That's what you're confident in. And that's what you're going to be confident in replicating day in, day out to make the monies. So do we have any other confluence here on the SPY? So breaking that zone of resistance. Could see it retest as support, right? Right. Is there anything else that we see? Any other confluence that we have established? Maybe a fib retracement, but it would be the 23.6. The 23.6 retracement lines up with the zone. Personally, I'm not a fan of trading off the 23.6. I like trading off those three, 61.8, 50%, 38.2. I don't really like trading off the top of a fib, like the 23.6. I don't like trading off the bottom of the fib, the 78.6. I always focus on the 3 mid points with the golden pocket. But wanting to show you how we do confluences, right? What could we do? Take a fib retracement from low a day to high a day, and we see that we do have confluence paired with the 23.6 fib. And it is breaking that zone of resistance, starting to retest as support. but I don't see any other type of confluence here. Let's get a long mapped out just in case, because if we have solid price action there, I would take the trade. We have like a nice tap, 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 and we have good price action, holding that level as support, not just one touch, but multiple touches, and things look really nice. There's still low risk, high reward opportunity here. Talking like 25 cents of risk, get like $1.20 out of it. You're talking a 4-to-1 setup. But I would want to see more than one touch point before it pushes. I'd want to see a little tap, tap, or a tap, tap, tap. Really show me, okay, buyers are here. It's truly holding that level of support. And then I would feel more confident to get in, knowing I have good risk reward and good price action to further validate this is a high probability trade. Because if we don't get that tap, 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 and we start to come back down, you could still crack it and retest it for the short. But if it's going to break, retest one time and push, fine. I'll just wait until the next zone. Again, I want to take high probability setups, guys. That's what I'm all about, high probability setups. But let's get an order thinking about for the long side. So we're going to go February 11th, SPY calls. Let's go SPY. We're looking at tomorrow's expiration. And probably go with that 40 delta on the call side. You already have your plan built. You know what kind of confluence you're waiting for. Good price action, tap, tap, tap. If you're on top of it and you have a trade before me, go for it. I still got to go get my trade. We're going to go 606 calls. 606 calls if that sets up. That's got a 40 delta. I've got 30 cents of risk. That's $12 a contract. $12 a contract times 10 contracts, $1.20. I get 4 times my risk, about $500. I risk about $1.25 to make 500 on the setup at a 4-to-1. Tomorrow's expiration, 606 calls, looking at 10 of those. Price action's got to confirm me clicking that submit button. But I'm ready to go. Plan's built, targets assessed, stops assessed. I know the setup. I know what I'm looking for to validate I want to get in. I've got the calls, the strike, the amount. I'm ready to rock. What are we waiting for? We'll tap, tap, tap. That's it. Something like this, I'll do a little of a scaling approach. If we get tap, tap, I'll take 5 contracts. If we get that third tap reaction, I'll finalize my position with 10. But I'm going to go half in right now because if it's a tap, tap, and it just cracks below that level, at least I reduce my risk substantially. So far, nice little pullback, little tap, tap at that zone. I'm going to start a position with just 5. If it pops from here, at least I have skin in the game. If it comes down again for the 3rd time and gives me that tap and that reaction, I can re-add and get my full position. But if it does, be a small little stop out, what can I do? Reduce my risk by scaling in. And things are trending higher too. Nice low, high, higher, low, higher, high. We got, QQQ trending higher. Entries were actually up there. I got about a 3-to-1 realistically. If I get the and I'm already thinking like, okay, what if this stops me out? That means it's cracking back below the zone, right? Then I'm already thinking about the lower high retest. Yeah, that could be a quick stop out, and I'm cool with that. I've accepted my risk. I built my plan. We have potential for the break and retest long. But let's say it does stop me out. What does that mean? It's cracking back below the zone. If it cracks back below that zone, what could it do thereafter? Retest it with a lower high, then drop. So I'm already thinking if this is a stop out, it'd be a good stop out. And what would I be willing to do shortly after? Look for the crack back lower high drop, and I just want to think ahead for that as well, just in case. That's your third little taps. You got tap, tap, tap. This is going to start to push for the break and retest. Ideally, you start to see it right about now. Nice increased volume on the 5-minute time frame. So you see 5-minute volume was increasing along the break. You see how volume's decreasing over the past couple of 5-minute candles back on down. At least we have volume correlating with price for a break and retest. So again, that's looking good. Trade's still intact. And you can see even on a 2-minute time frame where we have increased volume on up, decreased volume pullback. Right, so at least that shows that the trade is intact from a volume correlation standpoint. All taking place off of a key zone, and so far we got some pretty decent price action there, right? Overall, I mean, I like the trade. It's intact. We got good risk reward. Now we're at the mercy of the market. That's it. You're at the mercy of the market. Market's going to do what it wants to do. At least you got the SPY kind of doing its own thing compared to the Qs. Look at the Qs chart today and then look at the SPY. It's not correlating to the penny. So even if you see the Qs not looking all that great, pulls back, I mean, at least we know like the SPY can still remain intact here. It's not a to the penny correlation today. Not as tight as it normally is. And good price action there. I'm going to trail my stops up underneath that zone because, yeah, if we don't start to get that bounce off this higher low with good price action, we start to crack below it. I want to get out quick and then look for the potential crack and retest, and I can just limit my loss. I'm going to readjust my stop and bring it up a little bit tighter underneath that zone because I see the pullback low was right here at 604.25. That was the pullback low, and then you've seen tap, 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 tap. If you start to break below like 604.20, that to me looks like it's going to start to crack that zone, and I don't want to be long on it. I want to get out with a very, very small loss, look for the retest, and then look for the possible short if that's what we're to set up. Always just looking at both sides of the trade. Let's see if it gives me an opportunity to add. Five minutes still looks decent.
I'll be right back, bud.
All right, buddy. Might be where I add, and then stops just underneath that last little candle low. That was my stop anyway. So I'm going to add to it. I'm going to add it right next to my stop because if it's going to still work out and play out, at least that's going to be the best area to add. I feel like I'm a little late talking about it, but that's my add there. I got my full position, and my stop is underneath that swing low. So my stop is officially at like 604.07 on the SPY. Cost basis 137.5. The stops will probably be at like 130 on the contract. If I'm doing the math right. Now I just have my sell order typed up, ready to go. That's it. Not got to sell it, but I just have a sell order typed up, ready to go. I know my target's at. And now I'm in the mode of what? Managing my trade. That I'm in the mode of managing the trade, not the P&L. And The trade still looks good and good price action, good movement. I know I can still manage the trade, scale out accordingly. I know where my target is. If the trade starts looking weak and I see something I don't want to see, maybe I start getting out sooner based on price action. Maybe I close the trade completely. For example, we come up to high a day, sweep it, get a hard reaction down. Maybe I just want to close it at break even based on what I see in the moment. I don't know what's going to happen. If I manage the trade, I see what's happening in real time. If I see what's happening in real time, I can make real-time decisions to manage my trade correctly. Other thing, too, is how are the options correlating? Right? Are they moving in line with how they should, with how the SPY's moving? Or are they not moving well? Should we get $20 a premium by now, but we only get 10? Well, if I see that lack of correlation, that disconnect, maybe I want to get out because I don't like the way the options are moving. And I don't think they're moving the way they should. All of these things we're thinking when we're in a trade to make sure we manage it correctly and we get the most out of it. Decent volume on that last 2-minute candle. Not the best. So on that nice push on up, that was about a what? 50-cent pop? Give or take 50-cent pop, 40-cent pop there on that last 2-minute candle. The volume wasn't anything awesome. Volume was kind of just like not there. If I see buyers moving back in on the break and retest, ideally, what do I want to see? I want to see like the volume back up the move. I don't really see the volume backing up the move. And you also see how the options are kind of just stagnant, right? Those options are at 132 here. The thing moved 50 cents on a 40 delta. What should those options move? Probably about 20-ish cents, give or take. Right? What did they move? 5 cents? So, yeah. Not all that wonderful. Just things I notice as I'm looking at the trade to manage the trade. But yeah, came down 104.10. Those options were right around like 131, 132. You got a 50-cent move on a 40 delta. You would expect those options to move a little bit more than about 15 cents. About 15 cents. I mean, not too shabby, I guess. What are the Qs doing? We'll try to move on up. On a 5-minute, what does it look like? Nice volume pullback, nice volume retracement as stocks pulling back. Got a little bit of an uptick in volume on that last 5-minute candle, but nothing crazy. Then again, you just see indecisiveness between buyers and sellers. All right, that last 5-minute candle really shows indecisiveness from buyers and sellers. If you're long, what do you want to see? Decisiveness. You want to see that buyers are clearly in control over sellers, and you want to see that, within the candles. Right, that little candle here, equal upper shadow, equal lower shadow with a thin candle body, that just shows indecisiveness between buyers and sellers. So I'm just taking that into consideration, looking at the volume, looking at how the candles are forming, not just on a 1-minute, 2-minute time frame, but on a 5-minute time frame. We continue to see indecisiveness between buyers and sellers, and we just consolidate in this region, and it's like 50-50 between buyers and sellers, but I need buyers to be here 80% over 20% sellers. Trying to break it down in simple terms, like why would I still want to manage the trade? Maybe I want to set stops at break even because I see that. Maybe I want to de-risk and take a little bit of profit here. There's so many things that we can do based on what we see in the moment. And all of these things that we're analyzing right now, we could have never analyzed it when we took the trade because it hadn't happened yet. But we can react to what's happening right now in real time. Manage the trade, not the P&L. That's it. And remain calm, cool, collected at the same time. I'm just chilling, managing the trade, walking you guys through what I see, what goes on in my head when I'm in a trade, so you guys can learn from it. Start doing it yourself. So what do we got left on this 5-minute candle? You got about 2 minutes and 30 seconds. So we still got some live time on this candle. Good. Honestly, right now, that little purple line you see right in the middle of the zone, I'm going to bring my stop up. I'm going to bring it up. I wouldn't expect this candle to flip red, come any lower than that little purple line at like 604.20. So just kind of looking at the chart, how it's forming, how it's moving. I expect it to start to push on the break and retest. If it does, we're in the game. We're in the trade. It starts to roll on over. That's not going to look good with all that upper price action showing there's a lot of sellers present. If we see it come up again and get rejected and flip back down, like, why would I want to stay in the trade? I see indecisiveness from buyers and sellers. That wouldn't make me want to stay in the trade. I also want to see volume increase again as buyers push this up. So I want to see the volume correlate with the price. For this particular strategy, I am looking at volume. So again, break and retest, volume matches, looks good. Price action was good on the 5-minute, 2-minute as well, right off that key zone. And we had a nice, 3-to-1, 4-to-1 risk reward the start. Now look what we've done to our risk reward ratio, right? We've reduced our risk while keeping our target the same. So we've naturally just increased reward, lowered risk based on being able to manage this trade properly, based on what we see 10 minutes later. And again, we put ourselves in a good position to reduce risk while being able to still make the same, $500, but I don't have to lose 125 now. I can lose $50 and still put myself in a position to make the 500 if we can just get to the target and move another $1 the upside, 75 cents. But the way the options are moving, I don't think I'm going to realize that $500 because the options are still only up into the low 140s. Kind of having a hard time here. So we got swing low, swing high. So we had, high a day, low a day. We have this higher high, higher low. So we can see that, a little bit of an uptrend. We got this low, we got this higher high, this higher low to really validate that we're still going to be uptrending today. What do we need to do? Break this prior high. If we don't break that prior high, then in this region, just still a little bit of this, range bound consolidation. So what do we need to see? We need to see a clear candle close above prior high at 604.78 to validate we are in this uptrend and that we could expect our next target to be hit. I'd like to see that candle close on a larger time frame, not just a 1 or a 2, but ideally see that candle closure on a 5-minute, which the last 5-minute candle did not. Stops are not break even now on this trade, guys. Stops are not going to be break even here. Because if this candle flips red, that would leave a upper shadow above high a day, but never have a candle body close above that prior swing high. It would still not look good for this trend to continue. I would still be indecisive based on what we would see if that were to happen. So now I can justify bringing stops to break even on the trade. You guys want to trim a little bit? You guys, I guess, could trim a little bit if you wanted to. You're pushing, you got what? How much out of this? 70 cents, 60 cents out of it? Options are moving okay. About 15 bucks in premium on this. But we still have another 60 cents into target. But be mindful, if we start to see a lot of price action from sellers in this whole region between 605.05 and that 605.50, there's a lot of selling pressure from Friday at that level, right where your 38.2 fib extension as well. So just be mindful that you start to see it backing down pretty aggressively and you're like, damn, sellers are stepping in. You may just want to go ahead and take some profit because we do have a lot of that selling pressure in that region from Friday. This could be some where we have a hard time getting through that area. Be mindful of that. Volume is starting to increase, but we're not seeing it move. All right, that was a pretty small candle with that big, large increase in volume. That tells me there are some possible sell orders getting filled up here. It's going to be hard for buyers to get through some of those sells. Does that make sense? Big increase in volume, but that candle is not very big. I mean, look at this big green candle here. And the volume, and then match it with this little green candle here with the volume. That's what we call volume price analysis. That just shows you that there's a lot of orders, sell orders that we're trying to get through. Because that candle was so thin. Or so small, I should say, compared to this one here. So, high volume, small candle body. Volume price analysis normally tells you that there's some sellers. Sell orders still there. Sellers, holding the price down. Buyers are having a hard time getting through it. Stops are definitely break even now. 100%. I'm not going to let this go back below 140. So my stops now on the contracts are 140. That'll let me cover commissions and fees. But that's concerning on the long side. Large volume spike, candle body, or candle in total is kind of small. Compare it to this right here. Big candle, no volume. So that's a little concerning. You may want to take profit, here if you want. If you have a larger size, maybe you have something to take. Because what would I get out of this if I sold a little bit, like a whopping, $100 on a partial sell? That's not bad. I'm on my Roth. I want to hit on average $100 a day. That's the goal between the multiple accounts, which is not even linked right now. I forgot to relink it. So this is just on the Roth. It's not linked between my other accounts. It's struggling a little bit. Get a half order typed up just in case we want to take partial, just to get something in the pocket for our time. May not be anything awesome like that $500 trade we planned out, but I guess a couple hundred is a couple hundred. If we even get that. Is that 5 minutes still live? We got a minute on this 5-minute candle. Okay, I'm going to trail my stop up to 604.70. If this candle flips red and it leaves a big upper shadow above that prior high, it's not going to push higher right now. It's probably going to pull back one more time. So at least I can get something out of the trade. This candle needs to close, like here, for example, and show that we still closed above that prior high. Increase on volume on the 5-minute time frame. You got 40 seconds left. But if this candle does, for example, flip red, it would close below that prior high with a big upper shadow. That's going to be a complete out on the trade, 100% out. See, like that? That's, yeah, exactly. That's not what you want to see. That's an out for sure. It's got 1, 2, 3. Oh, and it didn't close. Would you look at that? That's a pain in the butt. All right, fingers on the trigger to get out because that doesn't look all that great. Being that 5-minute candle didn't close above the 604.78. So stops are at 604.75. Fingers on the trigger. I'm watching price. If we hit 604.75, I think we start to pull back into that zone again. And so I'm going to just take what little profit we have and then look for the next best entry. Hopefully you guys are learning a little something from the step-by-step on managing the trade.
Yes, a lot. Please keep talking.
What's
in your head? Yeah.
I will keep talking. I like sharing what goes through my noggin, man. There's a lot that goes through my noggin,
Now,
but
I'm driving, but I am looking real quick just at the chart. Y'all looking at SPY, right?
Yeah. And cool thing, Ed, I actually recorded this, so I can actually edit this up and send it to you.
What?
Yeah, man. I'm actually happy that I hit the
looking
record button this morning, and now we actually have a trade that we took. We analyzed it before the trade, waited for price action, entered the trade, managing the trade step by step. This will be good insight for you guys to go back and rewatch on what you should be thinking when you're in trades. What should you be doing? How should you bring stops up, the whole nine?
Me personally, I wouldn't have jumped in just yet because I'm looking at a 15-minute. And if I look to the left, I see 1, 2, two, until I see a break up or maybe a break of those two order blocks on a 15-minute, that red and green
From
candle.
Friday session. Yep, we just discussed that. Yep. And we're starting to, and we're starting to see there's a lot of sell orders getting filled up here because you can see that based on volume price analysis, like how those candle bodies look, how those candles are forming with volume. It does show you that there's a lot of sells getting filled. But we were in way down here.
Oh, okay.
We got in way down here. So we're up like a 2-to-1 on this. We're managing our trade. But yep, we just discussed. Look at the 2-minute time frame. You see that large candle, that volume bar right there at 10:30. Large volume bar, but look at that candle was small. There's a lot of those unfilled orders getting filled here, which is going to make this hard to see it move on up. That's Anna Coling, what I learned from her book. The one takeaway from her book that it took me a month to read was volume price analysis, how to match volume with candles. And that shows you that there's just a lot of sells up here. And so we are getting ready to close this out because I think it's going to start to reverse a little bit. 604.75 was the exit.
No, you had it a little bit lower than I did. I had it at right at the top of those candles, the wicks actually 605 something. But in my head,
I took the $45 win.
That's probably all I'm going to get out of it. Again, $30. But if you look at the trade as a whole, I mean, you still got about 50 cents out of it as a whole. We expect to get about $20 a contract there. I mean, we were in the trade for 5, 10, 15, 20 minutes on the next day. You're going to have some theta working against you for sure, but working against you where you only get 5 cents a premium based on that 40 delta, you get closer to 20. Yeah, just really subpar movement, and the trade took a little bit longer than expected, but that's how you manage the trade. Good trade, good analysis. It moved in our favor. Everything's intact, but what are we starting to notice now on the trade? Like, you know, Ed hit it on the head. Go to a higher time frame, like a 15. You're going to see some of those blocks from Friday session, right? So you see there was just a lot of selling pressure here before price was driven down with force. So there could be some unfilled sell order still here, or just apply a trading psychology aspect to it. Traders see this and now they're placing sell orders, right? Because they see that this could be an area to get short. Do we see that represented on the chart? Like, do we clearly see, hey, it looks like there are some unfilled orders getting filled. It looks like sellers are stepping in. We can. How? Go back down to a 2-minute time frame, for example, and check out that 1030 candle. What do we notice on that 1030 candle? Right? We look at this body, this entire candle right here. It moved from 604.77 to 604.93. So like that's a 15-cent move out of that candle. But look at that volume. That was a massive volume bar. That was our second highest amount of volume for the day compared to the first volume bar at market open. And then I want to show you something else. Go look at this candle from 1022. Look at how massive that candle was. That's a 50-cent candle, but look at the volume. You see the big difference between those two candles and the two volume bars? Anything stand out? Low
not only
volume
that,
on
I mean,
that candle bar. High volume on that candle bar. Why? Because there's a lot of sells holding the price down. So you got buyers stepping in, but you're filling all those sell orders, right? So there's a lot of shares being exchanged there, right? There's a lot of shares being exchanged. So if the buyers are in control and there's not any selling overhead, price should move up, right? That's a lot of volume. What does that show you? That, again, there's just that fight between buyers and sellers, but there's yet a lot of shares being exchanged there. So that's volume price analysis. That's what you'll learn if you read that book by Anna Koling. And so that starts to validate what Trucker Ed was talking about with, hey, look at those 15-minute order blocks from Friday session, right? What's the idea that there's
what I
some
started
unfilled
doing
orders
is, what I started doing is, why is it stopping? That's what I just want to know. Why is it stopping? That's what I've been doing. And then I started going into smaller time frames, and I'm like, okay, now I see why it's pretty much just stopping. And if you're profitable, once again, I'm not saying the market's going to go up. I'm not saying the market's going to go down in this point right here. It's just a battle. And if you're on options and you have a 0 DTE, I don't know how long this trade is going to happen, if it's going to go up or long or down. I mean, it took, what, 30 minutes to make that next move down on the past.
Yeah,
that was 30 minutes.
About a 20-minute trade to see it materialize, and it moved well. I mean, you got from the low to where it just put in that high. It was about an 80-cent move. Would you have been better trading futures on that trade? Yeah, it's a 1-to-1. You would have been very profitable. That would have been about, what, 6 to 7 points on ES. That's what you would have been able to get. $300 to $400 trade on one ES contract. Wow. We only got $31 on the SPY on 10 contracts, right? Just again, you're not really seeing those options move the way you would expect based on 40 delta risk reward analysis. You're expecting about $20 of movement out of the option based on the movement on the SPY, but you get what? Maybe at $15 at one point. So close, but not 1-to-1 like futures. Futures would have been much better. You would still be profitable if you were in a futures trade. But look at the options right now. They're back down to my cost basis, pretty much at my cost basis. And I was in here and price is still technically up 30, 40 cents, but back down to my cost basis. Thank you, Theta. Thank you, Time Decay. I was even taking tomorrow's expiration, not a 0 DT. There's a lot of stuff here. A lot of stuff. From looking for the short, why we wouldn't take it. We already saw the first short opportunity. First is always the best. We're not very confident to take the second one without confluence. Did we have confluence there? We didn't. What do we think can happen? Break the level. What happens if we break the level? We could retest it. What's our confluence going to be? Good price action. Did we have good price action? Yes. Did we have good risk to reward? Yes. Did we do the math on what our risk to reward is to get positioned correctly? We did. We took 10 contracts. Nice tight stops. 4-to-1 risk reward. Trade works in our favor. But, towards the end of this trade, we start to notice things that actually conflict being long. We didn't know all of that was going to happen down here, did we? No, we didn't. We saw good entry, low risk, high reward, confluence. We saw what we wanted to see to get in for the break, the retest for the leg higher. We didn't know we were going to see all of this confliction based on furthering our analysis, looking at a 5-minute, looking at, hey, there's going to be some selling pressure overhead. Oh, wow, we can actually see that there is a lot of selling overhead based on volume price analysis, looking at that small candle bar compared to a massive volume bar down here. We knew that that was starting to conflict the idea of being long. So why continue to stay in this trade if we now think the odds are against us to where we can start to pull back? Why not just get out and move on to the next trade? If you like the training, you just watched and you were digging it and you got some key takeaways, then I'm going to help you guys out with some next steps. So I coach my students every day in the market just like this, from 9 a.m. until about 11:30, 12 p.m. Eastern time. And that's just one of the many things that we do inside of the Alpha M3 mentorship to help traders get to profitability in the least amount of time possible. So if you want to work with me on this level and everybody else in our community on a daily basis and really take your trading to the next level, go ahead and take the next steps below. And that's going to be booking a call with me to see if you're a good fit for the Alpha M3 mentorship. It only takes a couple of minutes to get your call booked. You're going to do a quick survey first. Again, just make sure you're a good fit. Make sure that it's going to work for you. And if so, you have an opportunity to get on my calendar. We'll jump on a call, get to know you, understand your goals, where you're at with your trading. If we think we can help you, we would love to share the details about the mentorship, invite you in, and start working with you on a high level. If you have any questions, do not hesitate to drop those below in the comments. I will respond to each and every single one of those. My main objective is to help you guys become better, more profitable traders, and I'm here to make that happen. So until next time, stay blessed. Happy safe trading.